I'm gonna be making a little quick video to show you a couple confluences that I have found on catching reversals on ES futures, and also I'm going to show you a little brief one on gold as well, with volume being utilized as well as volume spikes being utilized using the VWAP indicator that I created. It is on TradingView, and I will put the link to it in the description. The indicator that you can use for the volume, this is one that I kind of added to myself, but they actually did block this on TradingView. But you can go to indicators and you can type in Salty Volume Stack, and that is the right indicator to use. I did make some enhancements to this one myself, just a couple alerts and everything else, but it's really not needed. Okay, so let's get down to everything. If you noticed here, you'll see that I have these different levels marked on the volume stack. Okay, those levels are 2.1K, 4.1K, and 6.1K. 6.1K is going to lead to your more meaningful reversals on ES futures. Okay, so when you see the levels are getting broken right here, where you'll see the 6.1K, and you also see this green dot right here. The green dot symbolizes the volume spike, and the highlighted candle as well as the dots right here, that is a liquidity sweep. Okay, so it's not always necessary to find a liquidity sweep in the volume spike going off of the standard deviation bands, which are the black lines. So this is the VWAP system. So when you find a volume spike and you also find volume being over 6.1K, what you want to do is you want to wait and see that the candle, next opening candle, is pushing above. Okay, now sometimes, yes, it can get broke back down. So I would always wait, because we are working on a 1 minute time frame. Wait for this candle to close, possibly wait for a small pull back and forth to start pushing up. As price starts to push up, then of course move your stop up, protect your position, at least to break even or whatever figure that you may be comfortable with. If you notice here, all these increments are in 2-point increments. So if you would have taken this volume spike off of this 1 minute candle, let this next candle show you that they were intending to push price back up, which also is going to confirm it by these bigger green bars, and it's pushing up over this level. Then you're going to notice that price pushed up and you went from 66.71, and this candle ended up at 66.94, which that is a great move. You could have added on to a position, as well as once this candle broke the high of this one and kept pushing up, or as it started going your direction, if you did want to add and protect the position, totally up to you. Same thing right here. As you'll see, we had a volume spike, and you want to really catch these on your downward candles as they're coming along. So you'll see right here again, over 6.1K, right? We had a volume spike. We did not have a liquidity sweep like we did on this one as well. This candle did push up and it did get rejected, right? So you want to wait for another candle to push up, and we've seen this volume spike occur on this candle, push back up. Now, if you wanted to wait for a proper confirmation, then yes, this price started to push back up and broke this high here. You could have potentially, let's just say if you got in even at 66.73, as we know these markets move fast, and you could at least closed out at 66.76. You know, if you moved the stop up and you got stopped out, or if you didn't, and it came back down here and worked you out. But that was still at least a little 3-point move that you could have possibly caught. This was on Friday, October 10th, which we know we had extreme downward pressure from Trump with the tariff news for China. So even in a downward trending market, right, you still can find some plays to be able to catch some upside. And then vice versa, same thing with the volume spikes, and then the volume stack moving downwards as well. It'd be the same exact thing. So I don't believe it was any volume spikes that were occurred to make this downward move. It was just pretty much just straightforward. You did catch one here where we did catch a volume spike to the upside, as well as right here at 11:06, right? So if you did see this move and you caught the alert and caught a volume spike right here, let this candle close. This one was kind of like a short-lived one, but as we start seeing the moves continue to trend downward, then that give us the same what's the word I want to say? That'll give us the same outlook as it would if we were looking for a downward position or an upward position. I'm gonna kind of push this back a little quick just to give you another example from the previous day, which was Thursday. And then we're gonna move forward on to gold. And I'll give you the numbers that I found to be useful for being able to catch those trades on gold as well. So if we just go back here, we want to actually get rid of the last 4 o'clock candle because those candles are usually bigger. Right. Okay. So same thing here, right? Catch a 315 volume spike over 6.1K, close towards the standard deviation band. Allow the next candle to open up and show you that they are trying to push upwards. It wasn't a whole lot of points made here, but you still could have made some money traveling from 6,771, and as we got over here, 6,779. We didn't have a volume spike here. This was kind of low volume, which I don't really like to take these. Some of them, they will pan out, of course, but I like to look for ones that have a little bit more meaningful volume in them if I'm going to take the trade. And you can find some that will work out even if the candle did turn green. If it did turn green and you want to wait until it breaks the high of that candle, that way you kind of know that they are confirming the move versus jumping in prior to them actually confirming the move. This one right here, this was a decent amount of volume down here with a volume spike. The move did get rejected as it did try to push back up here. So that was like real short-lived. And that's why I always say make sure you protect the position. But also we see that it was a volume spike from the bears that occurred here. So if you see one occur after you got your bullish volume spike with your confirming volume, you let this open up and it broke the high. Even if you took this trade, if you see a bearish volume spike kick in after that, that's probably going to be absorption. Sometimes it can play out. Me personally, I'm going to move my stop up and make sure that I do protect some type of profits. And if it just kicks me out, it kicks me out. Wait, and we can find another entry later on, right? Could have found another short-lived one here. Could have made a couple dollars. Same thing here. Could have found another one, made a couple bucks on the upside as well. Same thing right here. This one was at 4.1K, which is a decent one. All right. So like I said, you will find some that will still pan out. So we did get a liquidity sweep as well as a volume spike on this one. It was over 4.1K. The next candle confirmed it by pushing upwards. So catch this candle as it's breaking and then catch that upward move as well. Like I said, same thing for your downside moves. Same thing right here again. This one was kind of short-lived after this one pushed up nicely. If you do find a situation where it's like a pin bar, like we have right here, and it was already a liquidity sweep that happened on a prior candle back here, it dips down, we get a pin bar, and we get a volume spike with almost 6.1K, a little bit less, but over 4.1K, and the pin bar is higher up, and it's moving outside on the move. Yeah, I would definitely say get in and take this one to the upside, catch whatever that you can on the upward move, protect the position as always. Here, another great move again, volume spike, liquidity sweep. With this candle, like I said, if you catch the one that's forming like a hammer or a pin bar shape, it's going up, yeah, you can get in, take the trade, protect the position if it's on the inside, right? Like if you find one that's going to be on the inside, and I think it was one like right here, how this one pushed down, but this candle still closed on inside, then yeah, wait for a confirming candle to push up. Okay, and that way you'll have a better and safer entry. Like I said, same thing, bearish, bullish, doesn't matter. I like to look for these moves coming off of either a standard deviation band. Also, another thing, I know I do have all these up. I don't use all these indicators though, but another one that I would recommend that you guys have up is the pivots. So I do use the pivots as well, and you'll see why here, because this is also aligning with a pivot. Okay, with the pivot that I'm using is basically the pivot point standard on TradingView, I believe. Yeah, pivot point standard. Okay, and then once you click on pivot point standard, the one thing that I did make changes to, okay, is that we are using Fibonacci for our types, right? So once you use the Fibonacci, you want to set it on auto, look back period of 5. Okay, make sure that you have the equilibrium up, you know what I'm saying, support 1, 2, and 3, resistance 1, 2, and 3 up. Leave all those on. You don't need to add anything else on. But like I said, make sure that you have the Fibonacci, the auto, and the look back period of 5, because those are going to give you your levels where you're going to see these bounces occurring, right? As you see, same thing here, right? Where it bounce off of pivot point. Got down here, we are seeing our bounces off standard deviation bands. So these are good entry points to have as prices moving from pivot point to pivot point, which these are basically Fibonacci retracements, and also utilizing the standard deviation bands or the VWAP, which is our blue dot right here, current day's VWAP, and this is the previous day's VWAP right here. So we will still see those kind of rejections off of it. So you always, whenever price is kind of consolidating or trading sideways around a pivot point level from the Fibonacci retracements, then you want to wait until we give some type of break to confirm the actual move. Okay, I'm not going to spend too much more time on ES. I think I pretty much got to the whole point of everything with these levels using this indicator for volume. I say the main ones you want to see is it getting over 6,000, 6.1K, 4.1K are going to lead to your more meaning ones. Let's move forward to gold. I was telling my buddy about this the other day. Let's shrink this down. And if you notice, we're going to find the same thing pretty much here on gold. Let me exit replay mode so we can start from Friday for you guys here. So the levels that I found that are more useful when it comes to utilizing gold. Let me pull this back some so we can get our bars. Okay, you're gonna find decent ones. It's an odd number, and I know, right? 521, and the other ones are going to be at 1,000. You know, so we will find some decent ones right here. Like I said, this kind of rejected. It did go a little bit below the VWAP, current day's VWAP here, but that number was really low. That was at 2 p.m. So we're going to find our more meaningful ones. Like I said, once you find them over 1,000, it pushed up, wicked right underneath the VWAP, did push down. Same thing like I explained to you on ES. When you find these moves, if it does break outside of the body of the previous candle that you found your volume spike and also your volume breaking over 1,000, then yes, you can take it if it's breaking outside of it. If it's staying inside of it, then wait for the next confirming candle to give you your entry. I'm going to give you guys a couple more good examples if I can find them. Here we didn't have a volume spike, but we did have volume that hit up to 1,000. So you can just set alerts on here. That's what I did. Go up here to your toolbox, just grab a horizontal line, mark it. Once you mark it, then you can go over into your settings, and then you can go into the settings, change your coordinates. So it's at 1010. It doesn't really have to be at 1010. It could be just at 1,000. Not sure exactly how I got it there, but I'll change it just to 1K flat. So same thing here. Once price got to 1K, but I say you really want to find them with the volume spikes. So like right here, we found a perfect example with the volume spike, and we also had a liquidity sweep. This candle stayed on the inside, so then you want to wait until the next candle opens up and show you that the bulls are in charge of the move. Vice versa if it was bearish, okay? Same thing right here. Push down. This one it did break a low of it, but it also bull step back in, push price up. This one pushed up, so even if you didn't want to necessarily take this one because it was still on the inside of this candle, right here. It never broke the high. Then wait, catch the next one, catch whatever amount of points you can catch up. 4,015. So even if you got in at 4,016, you could have probably caught up to here and maybe got wicked out at 40.21. 5 point move on gold, adding on to a position, if it allows you to, or gives you enough room to breathe, right? Those are mainly the levels that you want to see for gold. I mean, I say it's basically me explaining the same thing over that I showed you for gold. That I showed you for ES for the same thing for gold. You want to look for your volume spikes to occur. Sometimes you're going to see multiple volume spikes, right? If you ever see one on both ends and stuff, then you really kind of want to wait it out to see exactly what it is that they're about to do. Called a definitely a nice size volume spike right here. It's way over 1,000. So when you see those volume numbers push really high, then you know that something is about to happen, right? So you just kind of sit back and wait and allow the move to play out. We call it one here, one here, one here. Once this close and push back up, if it starts moving and it breaks that high, enter the trade, protect the position as the position goes up. It is a quick scalp. But sometimes you are definitely going to find way longer moves, and this also applies even before the market. You'll still see sometimes that levels will get hit, and we broke over 500, and then it led to a meaningful reversal here. We already had a liquidity sweep that happened. Price kept pushing down, rejected, pushed up, and continued to push up all the way until the New York session actually opened. Okay, I'm going to pull one more day. So just to give you guys another example to look at besides just that one day. Bear with me 1 second. In fact, let me just do this to get it to move a little bit quicker. We will go here and okay. Drop back down to our 1 minute time frame. I know a lot of you guys are not fans of the 1 minute, and I totally get it and I understand it and everything like that. So you can look at a higher time frame. Only thing I'm going to tell you is that once you use anything like over the 5 minute, the volume is going to be significantly different as far as the 5 minute. To me personally, it works best on the 1 minute time frame. Once again, got our volume spike. Also have a big red bar to push down. And we also have high volume, almost 2,000 on this bar. So in a situation like this, you can enter if you would like to. Me personally, I would let this candle close, which we also got a bearish volume spike on this candle as well. This one's definitely going to be a short-lived move. I personally like to see a pullback on the move. But if it's pushing up, take the trade, protect the position at all costs. That should always be your first mind. Always protect your position. But like I said, you'll kind of see these patterns kind of repeat themselves over and over again. Sometimes you will see multiple push downs, volume spikes, volume spikes, volume spikes, volume spikes. And that's why I said wait for the opposite side to show you that they're trying to push the move in that direction. And you don't always have to enter on the first candle. Sometimes it's better to wait until the second candle or the third candle to be able to break the upside candles highs to let you know that it's more of a safe entry now. Same thing right here, 12:41 p.m. Volume spike, significant volume kicked in. We got our bullish candle, small pullback you would have seen at the start of this move, and then start to push back up, enter, protect your position. That's pretty much everything that I wanted to show you guys. I will leave the link in the description for my VWAP indicator, and you can play around with the settings to confirm whatever it is that you like. As far as showing the daily VWAP, the previous day's VWAP as well. These are my personal settings. I'll just let you guys take a look at this. I really didn't change too much as far as anything, just to show the standard deviation bands. I do have my dashboard up, which I believe you guys may have seen before. Swings, I didn't change any of the settings on any of this stuff here. It is 2 lines of VWAP. I will turn these off so that way you don't have it. You can set it for your circles, your line, whatever you're more comfortable with. Upper bands on, of course, shapes on, so that way you can see the volume spikes when they occur, whether they're bearish or bullish. And that's pretty much it that I have for you guys. I hope you enjoyed the video. Like I said, this is a way to catch meaningful reversals using this strategy. If you like to trade reversals, you can also trade continuation patterns as well with them, but I will possibly make another video for that to show you guys how to trade continuation patterns. The main thing that I wanted to show you is how to catch meaningful reversals using volume and using volume spikes as well, using my VWAP strategy. All right, guys, hope you have a great day.